Hey, everybody. Welcome to another episode of the Subnet Show. I am your host, Gabriel Cardona, and I am joined as always by the man with the most cats in all of crypto, Connor Daly. What is up, my friend?
Yeah, that name doesn't get old. I like it. All right, yeah, no, it's going good. It's always a good time when you're building on Avalanche.
Ooh, good. I agree. It is. I was just today thinking that I wake up in the morning with a sense of anticipation regarding what cool thing am I going to see today, because literally every day I see something that is mind-blowingly awesome working in this ecosystem. But before we go there, we have a very, very special guest with us today. We have Cryptofish, which is a co-founder of Trader Joe. Trader Joe might be the most popular DEX on Avalanche at the moment. If not, it is very close. We might have to have Connor and Cryptofish duke it out over who's got the best DEX on. Is it Pangolin or Trader Joe? I don't know. But anyway, I just want to say thank you for your time and thanks for joining us, Cryptofish. How are you doing?
Yeah, very, very excited to be on here. Yeah, just happy to talk to you guys.
Yeah, absolutely, man. Trader Joe is blowing up. Congratulations. You guys have done a really great job of your branding. It's very approachable. It's very friendly. It's good. It's a super great job on this. So, usually we follow the same kind of pattern on the show where we like to just get a sense of our guests' crypto journey and their crypto vision. And then we usually drill down on their topics. So, kind of before we get to Trader Joe and just talk about some of the cool stuff you guys are working on, can you just give us sort of at a super high level without going too far down the rabbit hole? Let's go back to the beginning. Do you remember like what was the first software stack or first API or library or language or whatever it was that really got you into programming and made you fall in love with programming?
Yeah, actually, okay, so I actually started learning programming around 2017. So literally like a couple months before the whole ICO boom started. Um, I hated it at the beginning. I was phenomenally shit. Like, I just didn't, nothing made sense to me. I would go through these Hello World tutorials and I could never really just visually see how like typing some stuff on a black screen can actually end up becoming some kind of cool app. It just never really clicked for me. And it was definitely like a steep learning curve. In terms of cool APIs, I mean, I don't think I did anything that cool until I went back to school for computer science and I was learning like, stuff that was more, let's say like much more hardcore. Some of the cool stuff that I remember building. I mean, definitely one of my favorite courses at school was distributed systems. So we had to build like a Google Cloud basically, which was really cool. Um, and my job in that was like kind of building out the like a fake big table, and we had to build it from scratch, and I really enjoyed that.
So how did you? I guess what was the impetus? If you didn't like coding, was it just like I need a career change or something like that, or just this is what I want to do for my job and I'm just gonna like push through? Or I guess like what was the impetus there if it wasn't just like the immediate love?
Yeah, yeah. My previous career, I won't mention what it was, but it was very very different to what I do now, and I've always felt like I just like building things. So, ever since I was in school, I did a lot of art. I guess that's where my kind of attention to detail and artwork and branding for Trader Joe comes from. I kind of, I obsess about finding good artists for our branding. But also did like a lot of cooking and stuff. I just always felt like I like making things and creating things. So I was looking for a new career. And I just felt like, what, I kind of like tech. And I thought programming could be a good fit. But unfortunately at the beginning it was just really hard for me to understand it. But eventually after I plowed through, I really started to love it.
What language were you working with at first, and then what do you work with now?
So I started off learning Ruby because I think all the cool kids were learning Ruby at the time.
I was
Then
working
I
professionally with
realized,
Ruby in 2017. Yeah.
yeah. So like I started with Ruby, and then I would Ruby on Rails, and then I'd make these apps. But it just felt like a lot of like cheat commands. So you just type a few things and suddenly you have like all these, like a whole app out of the box. And that was really frustrating for me because I kind of want to know what's going under the hood. Then everyone was like, oh, learn JavaScript. So I learned JavaScript and React. And then went back to school, you do like the Java, C, C++. I even did a bit of Haskell. Now just like, it doesn't really matter. I'll use any stack really.
Yeah, Rails generators are definitely like cheating. You can say, Rails generate scaffold and it'll spit out everything with routes and tests and like,
Yeah.
yeah, there is a lot there. Okay, that's pretty cool. So then you said this was right before the ICO boom, but it didn't sound like the ICO boom was part of what you were doing in the beginning. How did you on-ramp into crypto?
Yeah, so round about the time I started learning how to program, I was just also like, browsing the internet about tech and whatever. And then I just stumbled upon this thing called Bitcoin and blockchain. And I was like, whoa, this is so fucking cool. It's the future. And then I decided just to buy my first Bitcoin. And then, September came around and Bitcoin went from like $2,500 to like 10,000. And I was like, wow, this is so easy. I'm making so much money. And then I started going to altcoins, and then it wasn't about 3 or 4x anymore. It was like 20x. And I was like, oh, this is life is just easy now. So yeah, I was really excited. I mean,
then February
also,
rolled around.
yeah, then February rolled around and it never sold, and I was like, shit, now I'm back to being poor again.
Got it. So what, yeah, go ahead.
Yeah, and then also around the time I was just kind of fascinated with what was going on in the whole scene, and kind of just made it like a small goal in my head, like, oh, it'd be cool to become a crypto dev. But I actually think like a few years later, actually, be running a project.
Yeah. So what brought you to Avalanche in particular?
Yeah, I mean, so after the 2008 18 bear market happened, right? I basically, like most people, I just tuned out of crypto. So I spent that time going back to school and getting a degree in computer science and just like trying to catch up my entire like computer science knowledge. So I really like tuned out of crypto for a while, and then one of my classmates just got me back into it, and this was like DeFi summer. And I didn't know much about, he kept up with everything, but I had just like started to get back into it. And then he was like, oh, this Avalanche sales happening. And I kind of looked at my block folio and what was left of it, and there were just like so many random shit coins left from like a few years ago. So I was like, okay, what I have to lose? Like I just liquidated everything. There was like probably I think 10 or 12 different coins. And I didn't even know if they were like still, those projects were still live. So I just liquidated everything and put whatever I had left into the Avalanche sale. And yeah, I was very lucky to actually, everyone queued up that day. Some people got in, some people didn't. I was very lucky to get in. So yeah, I put all my eggs into that one basket. And then after that, I actually started to, I was like thinking, okay, now that I bought this thing, maybe I should try and understand it. So I started digging into like the white paper, and then kind of realized this is kind of cool. Definitely a lot more interesting, a lot different to say Bitcoin or Ethereum. So in terms of tech, I was also like feeling bullish about it. But then when mainnet happened and the first Dapp started going live earlier this year, I was like, you know what, this is probably a good time for me to actually get involved now. Kind of said that a couple of years ago I would like to get involved, and now's the chance really. I just felt like the ecosystem at the time was still very young, so it was just a good place to learn.
Great intuition, man. That worked out really well, didn't it?
Yeah.
You picked a good basket to put all your eggs in.
Mm-hmm.
Yeah, it was just a very fortunate sequence of events, I would say. I like to say I predicted all of this, but actually it was just dumb luck.
Yeah. So I guess how did you cut your teeth, like going from being like a follower to actually being a crypto dev? Like, what was your experience like actually like learning Solidity, or I'm not sure exactly like how'd you get in?
Yeah, I think, as a dev, like you always think to yourself, how do I learn how to, do Web3 and Solidity? And you go around forums asking people, and they always tell you the same thing, like, oh, go do crypto zombies or go take this course at Udemy. So I did all that. And I was like, oh yeah, this is pretty simple. I get it. And then you go fork Uniswap and you try and understand what's going on in the contracts, and it's not just like one contract, it's like a whole library of contracts, and you're like suddenly like, shit, there's just too much stuff that I don't really get. um and I think
I
that's
just
like
went
the
from
big
level 1 to
disconnect
level
here.
10.
Yeah, it's basically like that. Like, when it comes to crypto development, like there are a lot of resources for very beginner stuff, but there's no intermediate or advanced resources readily available. So I was like doing a lot of tutorials, and at some point I'm like, you know what, I don't think there's anything out there that will actually help me understand like the inner workings of Uniswap v2, for example, unless I just like go through it myself. And yeah, that was kind of the impetus of me um starting work, contributing to Snowball, and then also PandaSwap and other protocols. Like my main objective with those roles was just to get my feet wet.
So you came in through kind of like, once you started to get a little bit of like tutorials, once you had some knowledge, then you kind of went in the DAO route of working with some established protocols like Snowball, PandaSwap back in the day. And then you kind of eventually had the impetus of just like, yeah, I guess, yeah, what was the inspiration? What was the moment where just like, you know what, contributing's like fine, but like I'm ready to start my own thing?
Yeah, and how big is your team? Yeah, to kind of add on to that question, how big is the team, and how did you bring the team together after you had the inspiration?
Yeah, so I started contributing for Snowball. To be honest, I didn't do that much. Um, it was about the time that they just started, and then me and Leo volunteer ourselves. So, and then he became more involved. I was kind of just taking a back seat, just doing like very small contributions here and there. And then
Leo from
PandaSwap,
Pangolin, right?
yeah, Leo from Pangolin, and then PandaSwap launched, and I think everyone was really hyped for PandaSwap, and I was really hyped as well. So I degented into that thing. And then on the first day, they had that massive bug. And I was like, shit, I need to help them. Right. So I just volunteered myself, like, hey, let me go fix this bug for you. And then within a couple hours, they like welcomed me into Discord, and they're like, oh, yeah, thanks for being on board and stuff. And, I was getting my feet wet and trying to figure out what was the issue. And then I think about like a couple of days later, it kind of clocked into me that they had a team of about 6 people, and um I think each and every one of them had no idea what was going on or how to fix this bug, or just like anything about development in general. And that was really like the light bulb moment for me. I was like, shit, I thought I had this vision that crypto devs were like gods, like they knew everything. And it turns out they don't. So that was really the turning point for me. It's like, actually, you know what, even though I don't know much, like I actually am capable of doing this myself. And that was really like the turning point for me. After I worked there for a week, I helped them with some stuff, but I think I learned like probably a month's work of crypto development in that one week. And that was kind of enough for me to, first of all, give me the confidence to say, okay, you know what, um, I think I have enough like knowledge to run a project, to start a project at least. But also, yeah, I just learned a lot in that short time frame.
Nice.
Yeah,
Yeah.
that's a
So I mean, I
great
think
answer.
the imposter syndrome in crypto is very real. Of like, you think that everybody is like, oh, they made this protocol. They must know. They forked this protocol from Ethereum. They must know how it works. A lot of people don't know how it works.
No, a lot of
And
people, honestly, it was such a shit show at PandaSalt. They had 6 people on their team, and they called everyone called themselves a dev, but I think only 2 of them were actual devs. And even then, I wouldn't call them devs because one of them was like a business student who knew some Python Jupyter notebooks. He's never built an app before. And then the other one, he was actually a computer science student, but he had never built any web apps. Like none of them knew React or front end. And pretty much like the whole of, running a DEX or a Uniswap fork is React, right? So I was kind of like, wow, this is how it's done, really.
Yeah, and I mean, I like to say all the time that Ethereum is like 6 years old. Solidity is less old than that. Like, I mean, the original languages that they were shopping around were like like Viper, which was like a Python clone, but that died. Solidity took over later. Like literally nobody in the world has been doing this for 10 years.
Yeah. And you probably know best, like,
yeah.
so you probably know best, like the best way to really get involved is just to do it, really, right? Just to like,
Yeah.
fork something, go through the code base, but not just like fork it and change the colors, but actually try to understand like all the small things that go behind, that go underneath the hood.
Can I do a
Yeah,
slight,
I mean,
can I do a slight digression?
yeah, go for it.
Connor, I always thought that imposter syndrome was when like you personally didn't feel like you had the skills to be part of the team. Like if you got hired and you were like, how the hell am I on this team?
Yeah. That's what I meant. Of just like as somebody trying to break into crypto, it's very easy to think that everybody else knows
okay.
what's going on, but I don't.
Got it. Sorry, I didn't mean to
Yeah.
digress there. Gotcha. We're back. All right.
Yeah. So I guess I think you just what I tell people all the time is you're not that far behind. Like there's nobody has been in crypto that long. Worst case scenario most of the time is you're like 3 years behind. But like if you go to like work at Google and you want to like work on databases, there's going to be people there that have been working on databases for like 20 years.
Oh yeah, definitely.
So, in the grand scheme of things, like you can catch up.
No, that's really, really true. I mean, Dapp developed.
Nope. Lost you for 1 second.
Like,
yeah,
you're mostly doing front end, right?
Okay, sorry, you're back. We lost you for 1 second.
The last we heard was
yeah.
Dapp development. You started Dapp development and then cut out.
Yeah, so it's funny you mentioned that because my most recent job was Google, and I started there like as a new grad engineer, and at most places a new job, it takes you about a month or 2 months to onboard. At Google, you're still onboarding after like at least 6 months, even up to a year. You're still like a newbie. So definitely like Dapp development in terms of like a software engineering skill or discipline is actually a lot more simpler than other kind of software engineering stuff, mainly because like, your entire backend is just abstracted away by the blockchain, right? And that's usually like the most complex part, really.
So now I kind of want to get to kind of the main topic of the day. I want to really dig into some of like Trader Joe and some of your philosophies behind how to actually build a DEX and how to structure yield farming in ways that are both enticing and sustainable, and what the balances and trade-offs there are. So we've talked about Pangolin a lot on this show, but I think personally, I just am, I just have a lot more experience with Pangolin. I know a lot more about it, and I don't know as much about Trader Joe. So first off, like, would you mind kind of just giving us very quickly your pitch of like what makes Trader Joe different, and why is it the best place to trade on Avalanche?
Different to Pangolin?
Yeah, just what differentiates you? What makes you special?
I think there's a couple of things. I mean, first and foremost, and people usually say this as the first thing, is like our user experience. So it's something that we pride ourselves in a lot. Is like we have a completely different user experience that's unique to all of DeFi in terms of DEXs. We try and break things down as simple as possible to the users so they don't have to think too hard about what they're doing. The other component I would say is our yield farms. So, we didn't think this when we first launched, but it turned out to be a very time-consuming aspect of managing your DEX, which is managing your missions. It's very time-consuming, and the thing with farms and tokenomics and emissions is everyone's an expert, but no one really knows what's the right thing to do because yield farming is just new. It's new in general, right? It's only been around for a year. And we're probably just starting to see research about it because only now we're starting to get data about what our best practice is. But for the most part, we still don't know what is the optimal way to manage emissions and how to do the farms and all that kind of stuff.
Yeah, I think that that's the most challenging part, and it's very easy to hit send your token to zero accidentally by just you emit too aggressively and then people just dump it immediately, and or you just inflates too quickly and you basically just run out, and your project goes from having a lot of potential to being dead in the water. And it's very hard to climb out of that, so you have to get it right. It's like it's really challenging, and that's what, having experience on that side as well, I will say it's really tough, especially with when thinking about like a token, like how do I make this token like useful, and just the urge to keep up and kind of do what other people are doing, trying to add all the different like reflections and different staking mechanisms, and how do I think about how impermanent loss is going to affect this? And there's so much that goes into it.
Yeah, we were quite lucky because early on we just found a guy in our Telegram channel, and we were just like noticing his comments, and a lot of what he said about yield farms was actually very insightful. And then we just end up hiring this guy. Turns out he's an investment banker who does modeling for as a hobby. And
Amazing.
yeah, so it was just like, okay, this guy's pretty big brained and he knows what he's talking about, and he turned out to be amazing. But yeah, I mean, yield farming is in general is just very hard. I mean, I would say that when it comes to tokenomics, every cycle breeds a whole new discussion, and it takes a whole cycle to kind of realize that like the prevailing thought at that time was actually wrong. Now, where am I trying to go with this? Like in the last cycle, 2017, everyone was like, oh, infinite supply tokens are scams, and it's like the US dollar printing money all the time. The right tokenomics has to be fixed supply, like Bitcoin halving every 4 years. But actually, a lot of the OG DeFi protocols have actually proven this wrong. Guys like Synthetics, they have infinite supply mechanics, even Pancake, and they're proving that actually you can have successful tokenomics that are actually infinite supply. So in this cycle, a lot of it's down to yield farming, right? So whenever you start a new yield farm project, one of the big discussions is like, how are you going to incentivize your pool two, which is the farm with like your native token. So something like Joe AVAX or Joe USD. And everyone says, oh, you have to incentivize that as the highest because you want to reduce sell pressure and all that kind of stuff. And when we first launched, we actually incentivized that not as the highest, but like quite low. And we received a lot of FUD on Twitter and community like, oh, you guys have no idea what you're doing. The multipliers on Joe AVAX is so low. There's no incentive to hold this token. People are just going to start dumping it. I mean, our goal was to always increase it, but over time, we just felt like at launch, there was no need to have it so high. And yeah, I mean, we started reading some research coming from actually one of our VCs, Mechanism Capital, and they actually have a really good article about this, like how to incentivize pool two liquidity. And they've done research to, they've actually looked at other protocols and how they've done it. And we're starting to get data to show that actually you don't want to be incentivizing your pool twos the highest. But it's usually like this is like a very common discussion, like people, it's like, oh, in your head, you're thinking, oh, it makes sense. But what does the data actually show? What does the research actually show? And I'm curious to, as we start to learn more about yield farming, I'm curious to actually learn what are like the optimal ways to manage emissions and all that kind of stuff.
Yeah, no, it's a totally hard problem, and you're exactly right. It's just, how do you weight? The naive approach is to weight all pools equally, but it turns out, I think, that most people have discovered there's some benefits from having different weights, from having pools be more incentivized versus less incentivized. And I mean, part of the reason for that is the money goes where the liquidity goes where the incentives are. And so sometimes it makes sense to try to distribute money around, or like, this pool is very shallow. Maybe if we want it to fill up, get deeper, we need to give it more rewards. And it's a game, and it takes a lot of effort on the DEX operators' part to really figure that out. And I think the other piece about this that's really challenging is what is the token good for? Because I think this is a big question of like, we can't, most people do not want to issue securities. They want to make sure that they're issuing utility tokens for regulatory purposes. And people, don't want meme coins for the most part. Some people are totally okay with meme coins, but there's a different segment of the population that is very much like, I'm not going to buy something like this. Has to have actual value. It can't just be, I don't want to just buy, GameStop because other people are buying GameStop. Like that's, I don't want to be a part of the pyramid scheme. I want to make sure that my investments are backed by actual value, actual utility. And so I think the loophole that we've all kind of honed in on is governance tokens. And that has been like a super popular thing. And I really liked what you said earlier. Sometimes it takes the whole cycle to realize that the prevailing wisdom is wrong. And I think this might be one of the areas where the prevailing wisdom is wrong, is that governance tokens might not actually be the best option for most people, because I think just one of the things that we discovered with Penguin is just the voting process is so cumbersome, and it's hard to use your token twice as kind of like a yield generator. Is like staking, trying to use it in farming, and at the same time also using it for voting. And then there's like just all kinds of difficulties there. And then there's kind of like with DAOs and governance, there's sometimes you get like voter fatigue, or only a few people are voting, or there's just a couple of whales who have all the money, so they just make all the decisions. And I think that's it's really challenging to balance all this. So I guess I don't know if you have any response to that, but I also wanted to just ask: is Joe a governance token, or does it have? Or I guess how would you describe it?
Yeah, I mean, we haven't activated governance, but our plan was our plan now is still to always transition to a DAO. Now, our original plan was to like activate governance a month after launch, but obviously we haven't done that yet. And a month after we launched, we actually asked in Telegram, like, oh, what do you guys think about governance? And a lot of people actually said, don't do it. It's still too early. And we kind of, agreed as well. And the reason was because they said, what, once you start activating governance, like the growth just slows down a lot. And I remember like talking to some people in the ecosystem about this. And actually the Yak guys, they had something interesting to say. They said when they first launched, they were not the first auto compounder. Snowball was, and Snowball was the dominant one. But because Snowball was DAO from day one and Yak was not, they were able to leapfrog them just simply because they were just faster to develop. They weren't held back by DAOs. And initially, we wanted to activate the governance a month after launch. I mean, this plan is still to do that, but I started to think that the best thing to do, first of all, is to do a slow transition, but also be more conservative. And it goes back to what I said about how each cycle we kind of realized that maybe the prevailing wisdom was not the right line of thinking. When it comes to governance, we still don't know what the optimal governance model is. Governance models vary in different shapes and sizes. You can go from like, imagine a spectrum where on one side is like centralized, and then like a benevolent dictatorship, whatever, and then the other side is like completely decentralized, leaderless, etc., etc. You also have like stuff in between, right? And I still think we haven't figured out the optimal governance model. And the issue is that once you go full DAO, it's really hard to go back.
How long has Joe
Yeah.
been around? You said you wanted to go live after 1 month, and it was still the plan. Has it not been a month?
Well, we've been around for 3 months now.
Okay.
We launched in July. But I also think that
amazing growth, dude. Amazing success for 3 months. Really, I just got to tip my hat to you guys. Great job.
yeah, it's been kind of crazy. Thanks.
Yeah.
but with the governance thing, like I do find that on Avalanche, people are very big on governance, and that kind of makes sense, because a lot of people they came to Avalanche because they were interested in how to scale blockchains, but also the decentralized component of it. And there was pressure on us to activate the DAO pretty early on, but I also feel like it's something, first of all, that once you transition to, you can't go back. So we want to do it slowly but carefully, and also just to monitor how a lot of these DAO protocols on Ethereum are doing. That's kind of the benefit of Avalanche, is that you kind of learn from the mistakes, right? So everyone says, oh, you have to do the sushi model. The truth is, we don't know if the sushi DAO model is going to be a success or not. That's still like an experiment. And actually, I was watching the podcast with Joseph D. Long on Up Only, and by the sounds of it, he hates the fact that they have to operate on the DAO because it just restricts them so much. So there's definitely a lot of things you have to take into consideration here.
Yeah, I think there's definitely, I understand the ethos of like, we want to build projects for the community. We want to build projects that are decentralized, that can deliver on some of these promises without middlemen and stuff. But there is downside to that, especially that we've seen with some of the DAOs that I've been a part of, has been that once something becomes community owned, the community feels like they have a right to complain and you're supposed to do something about it.
Yeah.
And nobody wants to help you, but everybody wants to criticize you. And if you're promising to be like community driven, you do have a bit of a responsibility to listen to that feedback more so than you do when you're just like, hey, it's my project. If you don't like it, you can leave.
And you want to have,
say that.
and you want to have some type of mechanisms in place that can dampen the amount of change that can be kicked off, whatever the word is, by a stakeholder, right? So if you turn on governance and somebody who's a big whale comes in and just totally changes everything out from under you, that could obviously be a bad thing, right? So you kind of want to have some type of levers or some type of mechanisms in place where you can dampen the effects over the long term of some of the decisions, or at least do them in a way which makes sense. Because once you basically say anybody who holds X governance token can come in and change in parameters, you better make sure you got those parameters thought out well, and what can actually be done to them very, very well thought out, because somebody can always find some trippy edge case and just like really bring it to you. You know what I'm saying?
Yeah, absolutely. I've also just thought about like, and I also, you have to take into the context of like what you're building and how decentralized it needs to be. For example, like for blockchains, I think it makes sense to be decentralized and to run things through a DAO. But does it really make sense for Dapp to be completely decentralized? The issue with Dapps, right, is that if someone doesn't like the direction that the project's going in, most of those people don't care to vote no. They'll just dump your token. Now people say like, oh, it's like, voting in your respective country. I don't think so, because, if you're a citizen of America, you don't like the direction that America or political systems America is going to. It's not like you can suddenly just like become a citizen of, another country, right? But with dApps, you can do that. You can just jump from one project to another.
Yeah, I think the concept is a lot of times talked about is like you can voice or exit. So you can, like, if you're dissatisfied with something, you can voice your complaints, or you can leave. And it's very hard from like, a citizenship nation perspective to exit, but in DAOs, the cost to exit is very cheap. So
exactly,
that's it. Yeah.
Mm-hmm.
And I think this is one of the areas when people talk about like, we're still so early. I think in some ways we're early, in some ways we're already getting like fairly advanced. And, I think with layer ones, I think we're also like, we're starting to see a lot of innovation. Like we are still early, things are going to change, but I think we're starting to get not super early anymore. Like you're not early on Bitcoin anymore.
Right.
But
if you think about the adoption bell curve, right, there's like the innovators and the early adopters, and kind of like the mainstream early adopters, the mainstream late adopters, the laggards, and then the people who never fucking do it. And we're now kind of leaving. We've already done the innovators and the early adopters. Now we're transitioning into the big part of the big part of the bell, which is like early stage mainstream. And it's clear to me that just having worked in the industry for a while, that the blockchain really went mainstream to a lot of people over the last year, basically in 2020. Just the NFT boom, like so much freaking money came in through the NFT boom, and so many celebrities are now all about it that yeah, the blockchain went mainstream. So we're not as early as we used to be. Now it's critical that we develop these intuitions about how to use these new organizational structures like a DAO, because they cost nothing and we get them out of the box for every single new token. And like, I've been thinking about it because I went to Wyoming and I gave a presentation at DAO Day, and I was kind of just running through my mind, like why DAOs? Why are they so important? And it really seems to me like so far, they seem to sort of be like the canonical organizational structure that emerges from the DeFi paradigm, right? I think that's why they're so important, just because out of the box, when you have a DeFi token, you kind of get a DAO out of the box because you can use this. The holders of tokens can have governance, right? So they can submit proposals and submit voting. And liquidity begets liquidity, right? So this whole paradigm of DeFi, much of it, not all of it, but much of it's based on this idea of staking liquidity and getting in return some type of yield and or some type of governance token. And then these governance tokens represent your community ownership in this, your ownership stake in this community. And then you can submit, proposals and vote on those proposals. And every time you stake and end up getting this yield and this governance token, that just creates an entire new bunch of liquidity. So this liquidity keeps begetting liquidity, and it just keeps blowing up. And so now I think as we move into this from innovators to early adopters to sort of, mainstream early adopters, we really want to wrap our minds around this DAO paradigm, because it's just what we get out of the box for every token. And I suspect it's just so transformative, because the entire story of what we're experiencing right now is humans and groups becoming asymmetrically empowered and being able to, communicate and form groups easier than ever. So one thing I did want to mention to you, Cryptofish, I have no idea what your all's intention is with regards to actually if you're going to do an LLC or something like that, but I was just in Wyoming, and as of July this year, you can actually register a DAO as an LLC. So if you're, going to do any type of legal incorporation in the United States, I suggest you check out Wyoming. It's definitely the most innovative place. And Caitlin said she would be a guest on the Subnet show towards the end of the fall. So hopefully we can get more information. But as you were speaking, it made me think you should let him know that you can register a DAO as an LLC in Wyoming now.
Yeah, there's actually a couple of services that do that. Some other guys recommended it to me. I think the other place is also Delaware, right?
Yeah, but Delaware doesn't do a DAO. So see, this is what's interesting. Wyoming was actually the place that came up with the LLC. But somehow Delaware became the people who ran with it. And I know that bums those people in Wyoming out, right? That was like their thing. So now they've got 24 laws they passed over the past 3 years for blockchain stuff. It's the most blockchain friendly place in the country. And one of them recently, one of them recently was the DAO law. So you can, you can do a token sale, and every single purchaser of your token is a unique LLC, and they're all firewalled from each other. They allow token sales to be seen as utility tokens. There's an entire new type of bank that can hold crypto assets. Caitlin Long's company, Avanti, is issuing a new type of digital asset that acts like a stablecoin, but the IRS sees stablecoin as property, and even in the USDC documentation, it says I'm going to stomp on this, but basically it says that they're not backed by any legal reinforcement. But this new asset that Caitlin Long's company is issuing is like a cashier's check, and the IRS is going to see it as cash and not property. And so that's going to have all kinds of implications for taxes and everything. And then recently, another law they just passed was the DAO LLC. So now you can register an actual DAO as an LLC in Wyoming. That's pretty cool.
So the dream is to move to Wyoming, buy a ranch and be neighbors with Kanye West and run your own DAO.
That's the plan. That's definitely the plan.
Get Kanye West to join your DAO and then have it blow up even further. That's the long game.
I like that.
Believe it or
I
not,
guess
that's
we
not as far. That's
Make
not
sure
as
he
far-fetched
shows your
as-
NFTs as well.
You know, that's not as far-fetched as what we're saying though. Like the other day, Snoop Dogg revealed that there's some big NFT whale called Dead Medici, something to do with Medici. I forget what the username
Oh
is.
yeah, it turned out he like revealed it as him, right?
Yeah, totally. So this is a whale. They've got like 5 million in NFTs. So already it's sort of like the cultures have cross-pollinated. It's not a big leap from Snoop Dogg being a $4 million NFT whale to them talking about DAOs, simply because DAOs are incredibly transformative, right? Like the
Yeah.
benefits are obviously there, and there's plenty of smart people in all different types of culture and ecosystem. So will it surprise me if some big hip hop mogul comes out with some DAO stuff in the next 18 months? I'd be surprised if somebody doesn't, because that's what adoption looks like, right?
Yeah,
I
definitely. I
have-
mean, you know, to go back to the DAO, like, you know, I definitely think I'm not like anti-governance, like definitely want to do governance. But the issue with current DAO models is that just voting, I don't think the whole point of voting is to get the community involved, right? And for me, I just don't see voting as that kind of solution to get community involvement into a project. But you know, maybe this could be another way, whether it's through NFTs or
And
some
you flesh
kind
that
of
out a
social
bit.
component.
Why do you not? Do you just think people are apathetic to voting?
I think, I mean, the numbers speak for themselves, right? Like most projects, you know, what's like the number of actual people who actually vote on proposals? I think it's like 10%.
I mean, the other thing is just so hard to keep up with everything. It's just like, how many projects do you hold tokens for? You know, and
Exactly. Yeah.
how many, I have to keep track of how many governance proposals are going through. What's the roadmap of each individual
Dude,
company?
ultimately it'll be delegated, right? It'll be kind of like politicians. You'll delegate voting out to somebody is what I suspect will happen, right? Somebody who actually cares about that particular protocol. And you'll just say, I trust Connor. I'm just going to delegate my stake to him.
So I have a theory I'm working on. I'm not sure if I 100% believe this, but I'll toss it out here. I think that the main innovation of DAOs is not actually governance. It's actually breaking down gatekeeping barriers to participating in like a corporation, basically. Of like, it's not the best way to phrase it, but like if I love Google Docs and I want to work on Google Docs really badly, I have to get a job at Google, and that's like really hard. And I have to be, you know, really well qualified, pass a lot of interviews, get placed into a specific team, and like that's like hard to do. But if I really love Penguin, if I really love Trader Joe, if I really love Yield Yak, I can just like be working on those projects in a few minutes. And like that's the beauty of open source. But for the most part, open source software is like shoestring budget, people in their spare times. Like it's not actually financially supported. But DAOs kind of have like a model of actually, you know, like having funds to run open source projects, to let anyone get involved, because there's always way more work to do than is available. And if you're interested in participating, like you can for the most part. And like, even if you're not the most skilled, like people can usually give you a small task that you can actually use to learn rather than like just being overwhelmed. And people are so communicative and so helpful that and the communication pathways are all there. Like everyone's on Discord or whatever future Discord ends up being. Whereas, and it's just so open compared to like mailing lists, which I always found intimidating. So yeah.
You know, definitely. I think, yeah, DAOs have been wonderful for getting communities involved. But for me, I think there's just still a lot of evolution to be done in terms of finding the final form of DAOs.
So I have this idea that I've been going on about for a while that I call the startup of one, but it doesn't have to be one. Like it could be a startup of us three or myself and Connor. But basically, like the trend in startup culture, of course, has been the same trend we see in mainstream, basically things becoming more powerful and becoming more inexpensive. So, you know, it costs 100 times less now to create a startup than it did 10 years ago, when it cost 100 times less to start up, 10 to 100 times less 10 years ago than it did 10 years before that. And that's of course because of, you know, things like Moore's law and cloud computing. And now the blockchain introduces an entirely new amplifier to this startup of one thing. And so one of the reasons I think that DAOs are so powerful It's because they allow you to completely abstract away all of the bureaucracy and all of the process of running a business. And so you can basically just automate all of that or have it running as a smart contract, and it's self-reinforcing and it lives on the blockchain and it does its own thing. And then you yourself can focus more on the special sauce that you bring to the table, which is the best way with all modular type systems, right? You're able to leverage the abstractions and the primitives of everybody else, and then you just slap your special sauce on the top. It's one of the great things about open source and all of these things. And so I think that's just a big part of the power of the DAO. I always say the story of the singularity is the story of the individual becoming asymmetrically empowered against the state. Because as you notice, the more and more this information science technology becomes powerful, it just makes individuals incredibly empowered. You know, think about encryption, how empowered you are with encryption against the entire state. Right. So there's like this entire state that wants to watch everything you do. And then as a lowly mere mortal, you have the ability to just encrypt everything you want to do with some encryption that would take the lifetime of the universe or greater to crack it. And, you know, you can communicate with your people completely encrypted. Think about somebody like Satoshi. Let's presume Satoshi was an individual. I actually think Satoshi was a team for what it's worth, but let's just say Satoshi was a person. Imagine how asymmetrically empowered Satoshi was. They still don't know who the hell he was. His OPSEC was that good to where, using all of these modern tools, this dude was able to show up on the scene, drop a financial revolution, make $50 billion or whatever he made, and completely dip out, and nobody ever knew who he was. That's pretty freaking powerful. And so I just think DAOs are another amplifier to this trend. They allow an individual or a small group of individuals to be asymmetrically empowered. So you can just take all of the process of running an organization, which is just wait. If you're trying to take an idea and change the world with it, the process is the drag that prevents you from getting takeoff and hitting escape velocity. And DAOs allow you to abstract away all of that process into a smart contract. And it's just incredibly, incredibly empowering.
Yeah, I mean, just to echo what you said, like, I think not just DAOs, but just in general, like crypto projects, you know, whole idea of just starting a project with your buddies, going anonymous, you know, interacting with with the founders of a project through Telegram, Discord. This in itself has, you know, turned how we think about startups, how we, you know, think about running startups on its head completely. I just don't, you know, after running a crypto project or after being involved in crypto, I don't see how anyone could go back to a traditional way of starting a startup anymore. You know, it's just so much headache. You have to start up an entity, and, you know, you got to hire lawyers and all this kind of stuff. And
I mean,
yeah,
man, I was
customer
at
support.
Trulia and we had an IPO. So we actually went public on the New York Stock Exchange and we raised 100 million bucks. And it took us about a year and a half. Our CEO did an entire road show where he literally physically went all around the country and met with all these big bankers and big shots. We had an entire team of super high dig lawyers, Silicon Valley lawyers. We had an entire press just force. You know, he was on every major media outlet at the time. You can imagine all the visual news channels, all of this stuff, print media. And we raised $100 million. And then flipped that, the token sell at Ava Labs, where we raised, I think, 64 million bucks, but I'm sure we could have raised $100 million. We shut the tap off after 4 hours. We raised $42 million. Or just didn't name your typical, not even take Ava Labs out of it, typical token sell. How fast and easy and seamlessly and just you can raise that capital. Now, still in theory, there's going to be roadblocks and red tape depending on your legal jurisdiction, but sort of that hurdle aside, an ICO versus an IPO is like 1,000x multiplier. Like the ability to raise
Yeah,
capital on the blockchain is insane.
yeah, absolutely.
So I wanted to change the conversation a little bit away from DAOs, and I kind of want to go back to some of the conversation we were having about yields, but I kind of want to approach this from a different angle of what is the end game of yield farming and DeFi is. Because I think we've seen recently Avalanche launched our Avalanche Rush program, which is an incentive program to try to bring people to our ecosystem, which has also been, a strategy that's been pursued by other chains as well. So Polygon did something similar. Phantom, I think, is doing something similar, and other chains are going to do something similar in the future.
And Trader
And
Joe
it's
is part of Avalanche Rush, right? With 20 million.
That's right.
Yep, nice.
Dang, it's going to be a great time to try that out. So yeah, so I mean, there's this whole kind of philosophy that money goes where the yield is, and that's where all the liquidity goes. So I guess, are we just going to end up playing games of people trying to eke out 0.1% more yield than somebody else, and then all of the money is just going to flow to the person who gets more yield? Just a new chain's going to come along, raise a bunch of money, and do an incentive program, pull people over to their DEX, pull people over to their chain? Or do you think we are going to see some, and so are we gonna be chasing yields forever, or do you think that there's some end state where we have some, I guess, more, I don't want to say sustainable yield farming, but necessarily just some kind of ecosystem that seems more fixed and less exponentially weird?
Yeah, this is a good question. I think with yield farms, especially with DEXs, we kind of lose focus of what the whole point of yield farming was there in the first place. Like, why do we incentivize yield farming on a DEX, right? And the whole point is we wanted people to add liquidity into a pool so that, when traders trade, there's more liquidity and less slippage and all that kind of stuff. I think, to answer your question, whether it's just going to be endless yield farming, it depends on the tokenomics of the project, really. Like, the pancake swap model, it's infinite supply, so they mint tokens every day. But that also gives them the ability to incentivize liquidity technically forever, right? Now, not every project has infinite supply. Trader Joe, for example, doesn't. It's fixed at 500 million. So at some point, we won't be able to offer yield farms anymore. And the question is, what happens after that? Do we need to have yield farms? I feel like at this point, we're so used to it that we expect it. But actually, if you look at the biggest DEX out there, which is Uniswap, they don't offer yield farms, yet people continue to add liquidity there, right? So I think the strategies will definitely change, at least for us. Like with Uniswap, people will still add liquidity into Uniswap, but they still have the ability to put their LPs somewhere else into farms that offer them yield. And that's kind of the strategy that, we're starting to try to transition to, is that we kind of offer farms for every project out there. But also I think, and this is very deliberate from Uniswap v3, is that, the whole point of adding liquidity in the first place was that you get a percentage of all trades as a fee. On Uniswap is 0.3%. The issue with the V2 model is that is not a big enough incentive for people to add liquidity on its own. So that's why people added yield farms on top. Now, I guess the optimal end state would be like, we can incentivize people to add liquidity without them having to go into yield farms as well. And we've seen that with Uniswap v3, where they created this new model where you can still get a large percentage of trading fees without having to add so much liquidity, right? So I think eventually this is the model to go down under. But just to touch upon your point, like, with every L1 or L2 now is doing like incentives, right? Like Avalanche has their own, Phantom, was it Polygon, whatever. I mean, for the most part, yield farmers are mercenary. They don't really care. They're blind. They will just like chase yields wherever they go. But doesn't mean that if you're a new project and you offer degen APYs, you can suddenly just get like a lot of liquidity. I think there's a lot of factors involved other than, obviously, having good yields is important. But what we realized was also equally important, or maybe even more important, is having mindshare. And what do I mean by mindshare is that, like, people want to, obviously if you have good yields, people will want to ape into your farms, but they also they also attach some kind of emotional value or some kind of there's a basically what I'm trying to get at is that there's like a stickiness involved in terms of investors deciding whether they want to go into a project. A good example of this recently that's now in Avalanche is like Wonderland money, the MIM token and time. So like they're doing fantastically well. And if you go on Twitter, people seem to love them. So the question is, why do they have such mindshare? Is it because they have strong branding? Is it because the team, like Daniele and his team, people just have a lot of trust in them? I think there's many factors involved, but definitely like having strong mindshare is very important.
Oh, that's a fantastic answer. Yeah.
Yep, I agree 100%. Social equity is maybe another way I would phrase it, but yeah, we talk about that often. It's like that's something you can't even buy, right? You could not even buy the way people perceive you. You could try and steer it through marketing or some campaign, but being able to organically have social equity is priceless.
Yeah, and I think just the way. Or go ahead.
So just to go back, so like the L1, L2 wars, right? Like Avalanche is in basically a war with Solana and Phantom, whatever. It's like, yeah, tech is important, don't get me wrong, but it's also important for in order for Avalanche to win in this, to also get that social equity. And that's probably something that Solana does very well because everyone just loves SBF. But from what I've never used Solana, but from what I've heard, like their tech is not that interesting, the UI is not that interesting, but they just have a lot of social equity. So yeah, just to echo what you said, like that's very, very important.
And I think if you look at like who's using crypto right now, so many people are involved in the communities. Like the reason DAOs are so popular is because very few people come into, like the people that come into crypto and don't care about it just buy on Coinbase and then they don't think about it. But the people who are like actually withdrawing their tokens, going to the chains, trying out the apps, so many of them are involved in the communities. They're on Twitter, they're on Telegram, they're in Discord. So, I mean, those people I think want to go to communities that are friendly, that have good memes and are, interesting and, get talked about. And I think that's where a lot of the social equity, the mind share that you talked about is like so powerful, because it's not the dispassionate user base we're talking about now. It's not just like you go to your retirement fund, you set your allocation, and then you check it once a year, and you just don't think about it. Like, because everyone that's involved is just so actively managing everything that they do, managing their attention. It's just like Twitter. It's all about attention hacking. And if you can hack more attention, your project's going to be a lot more valuable than if you're forgotten or if people have a negative experience and leave.
I actually think this is the most important part of running a DeFi project. It's the whole community building aspect. Like it is something that's, that part is sometimes overlooked, but it's probably the most important thing. You're right. Like some people, they'll just buy their coins that they won't kind of ask questions after that. But there's also a large people who, they like to buy your coin, but also hang out with you. They want to hang out with you in Telegram. They want to shoot the shit. They want to post memes, but also ask some interesting questions. Like your job as a project owner is not just to deliver products. It's also, to provide a space for people to hang out and just to, I guess in crypto as well, we're all kind of outcasts. Like I don't know anyone in crypto who's quote unquote normal. We're all kind of weird. So it kind of makes sense that we're all just like, I don't know, like many real life friends who are into crypto, so when you find someone, it's like you're very like excited. And that's also the reason why like a lot of us just like hanging out in Telegram and Discord and just chatting to, our fellow users and stuff. It's like it's like a little safe haven, really.
I had a funny moment like a month or two ago. I had to go to the doctor, and he was asking, I was wearing a MetaMask t-shirt, and he was asking what it was, and I was explaining to him like what Avalanche was, and he was just like, all right, what app do I need to go to like download all of this?
Yeah. My mom was asking me how to buy Joe, and there was just too much painful process.
I'll
It
just
was
send
like,
you some mom, like Merry Christmas.
yeah,
Happy
I was like, don't
birthday."
worry about it. I'll just send you some Joe. Don't worry about
We're
it.
stoked now though with Coinbase. That's the big piece of integration. Now we can get everybody just to buy Avax on Coinbase and then to use Joe or Pangolin to get anything else they need.
Well, what
Is-
we
is-
need now is we need ERC20s on Coinbase. We need Joe on Coinbase.
Yeah, I
We
agree.
need all of our other ecosystem tokens.
When is Avax getting onto Coinbase? I feel like this meme has been floating around for
live
more than
now.
a year
It's on
now.
Coinbase now.
Yeah, it went
Oh,
live.
it
If it
is?
weren't, we
Yeah,
could
last
definitely
week.
not tell you.
Okay. Okay.
Yeah, last week it
Okay,
went live,
finally.
Yeah, totally. All right, guys, it has been 1 hour, and of course, we always like to be super aware of our guests' time. So I just wanted to say one more thing. Do you know the details of the Avalanche Rush program? I have the blog post here open. I could read it, but I was just wondering if you know the details. I definitely wanted to bring attention to the Avalanche Rush integration with Joe.
Yeah, so it is 20 million total. So 10 million of that will be from us in terms of Joe. And then the Avalanche Foundation is also giving us 10 million in AVAX incentives. And in terms of what we're going to do with incentives, so there will be a portion of that used for our lending and borrowing markets when that goes live very soon, which is sometime next week. That is, it will be confirmed probably tomorrow, the exact date, but Banker Joe is going live. And another portion of incentives will be used for yield farming, but with a twist. So we're going to be incentivizing native projects. There's definitely a lot of projects, exciting projects coming over from different chains, but we want to incentivize native projects which launch on Avalanche and which provide good
Nice.
value
Good
to
idea.
get more incentives on Trader Joe.
Yeah, that's a great idea. Cool. So yeah, 20 million. If you guys didn't catch that, 10 million in Avax from the Avalanche Foundation and 10 million in Joe. And then they'll be incentivizing basically lending and borrowing of native tokens in the Avalanche ecosystem. Very, very exciting. Congratulations on getting to be involved in that. I think that's going to be a huge accelerator for our entire ecosystem. Okay. Any last thoughts? Do you guys want to call it? Do you want to pass the mic around? Is there anybody you want to give a shout out to on your team or anything like that?
Oh, really? I mean, shout out to my team. They are amazing. They work every day and night. And yeah, seriously, without them, we'd be kind of useless. Well, I'll be useless.
So where can people find you if they want to hear some more about what you have to say on Twitter?
Yeah, I'm on Twitter. My Twitter handle is Cryptofish X, but also my Telegram and my Discord DMs are open. I get spammed all the time, but I also don't want to miss out on community members sending me nice messages. So feel free to send love. It's always very welcome.
Of course, we'll always add all of this to the description box below. We'll add the Trader Joe URL and socials and all those good things. Okay, well, I just want to say thanks for coming on, man. This was really informative. I can tell you're clearly a very sharp dude, and to have only been, doing code since 2017 or something, I can tell you definitely have a very, very bright career ahead of you. So just congratulations on your success, and I'm sure you're going to have more continued success. So yeah, you have an open channel here. If you ever want to come back on and plug something, or if you just want to chat, let us know, and you can come on anytime.
Yeah, absolutely. Thank you guys for having me.
Got it.
One last thank you. You were, I think, one of my original big supporters on Twitter a while back. I know you always gave me a lot of love there and would retweet a lot of my threads. So I just wanted to say thank you for that.
Yeah, I really enjoy your threads actually. I remember really early on, there was one of those Telegram channels. It's before even Trader Joe probably started. And one of my feedback to developers and the ecosystem is that we kind of it's good for us. It was better for us to have a more visible presence on Twitter. You see that a lot in Ethereum, Bantag and all those kind of OG devs. They always post stuff or crypto, right? I just feel like on Avalanche, a lot of us prefer to just hang out on Telegram, and we don't really publicize our thoughts a lot. And I really appreciate both you and you too, Gabriel, about posting stuff about development and just what it's like to work on projects, Solidity, working on Avalanche Go, all that kind of stuff. The community definitely needs more of that. And it's also good for investors to kind of see that visibly as well.
Yeah, I think that's spot on. Connor, where did you mentioned Twitter? Where can people find you?
Yeah, you can find me on Twitter at DAS_Connor. So DAS_CONNOR.
Got it. Any last minute thoughts?
No, this has been an awesome show. Yeah, I've learned a lot. I'm a big note taker, and I'm gonna write down some of the things you said because this was awesome. Definitely some alpha here.
Yeah, that was really good, man. Thank you. All right, thank you, gentlemen, and everybody who's still watching. If you made it this far, thank you so much. You're an absolute champion. Of course, we will be back next week. Connor and I have been reaching out to all kinds of people to bring on guests. We've really got a great list of people who've already accepted. So we're going to see all kinds of fun stuff coming up. Make sure to follow the Subnet show Twitter account, which I'll link below so you can always be up to date on the next guest. So thank you very much. We'll catch you guys next Thursday. And as always, from Snowflake to Avalanche and through consensus to the stars. Thank you so much. Cheers, everyone.
All right.